approach, including these 5 principles that I mentioned. Even this year, we have taken out a number of regulations, urban cooperative banks, risk weights to NBFCs, the provisioning requirements for government guaranteed security receipts, priority sector lending guidelines were revised to boost credit to the undeserved segments. We have rationalized the runoff factors for the LCR. It will hopefully release liquidity of about 6 percentage points. Similarly, we have come out with comprehensive and rationalized regulatory framework for investments in alternative investment funds, co-lending, non-bank, non-fund-based facilities, project finance, and gold loans. All these are examples of how we have been agile, we have been consultative, evidence-oriented, principle-based, and proportional in our regulation making. Going forward, we will continue with this approach. Our focus will be threefold. First and foremost, we will continue strengthening financial stability. This is our primary objective. This is the foundation on which this whole system is built. And so we do intend to implement the Basel III guidelines for market. They're already the draft is already there. Similarly, credit and operational risk from 1st April 2027, for which credit risk and ECL-related draft guidelines are now proposed to be issued soon. The remaining are already issued in one form or the other. Similarly, the forms of business circular is also planned to be finalized quickly. Second, we will endeavor to enhance ease of doing business. A lot of this has been talked about, and the government is also on its part doing its bit, having set up some task forces for enhancing doing of business, both at state as well as at central level. We have already in this regard rationalized a number of our regulations. The number of returns that regulated entities have to submit to us is an example of this. And now we are in the process, as I mentioned earlier, of consolidating all the regulations, and we have lots of them, thousands of them, into few regulations so that it becomes simpler, easier for you to comprehend and understand. In our pursuit for making principle-based framework, I would like to mention here that we wanted to give autonomy to the boards of the respective entities to frame policies, while the intent was to leave the detailed policy making from the regulator to the banks. What it has done is perhaps that it has overburdened some of the boards of the regulated entities. Therefore, we are trying to rationalize now these macro policies that need to be approved by the boards of the regulated entities and leave the procedural and routine matters with the management under the board so that the board gets quality time to deliberate on strategic and important matters.